After a crash, your portfolio turns green again, and suddenly you face a critical choice. That recovery triggers the toughest question. When exactly should you exit? Do I sell now or hold for more? Professionals don't guess. They follow a clear system to decide when to exit. Instead of relying on emotion, they use a structured method that removes guesswork. This system eliminates panic, controls greed, and gives you clear timing for every exit. Most investors struggle with one critical question after a market crash. When exactly should they exit their positions?
The typical cycle looks like this. Panic selling at the bottom, buying back during recovery,
Exiting early from fear, then regretting the massive gains they missed. They survive the crash, but miss the wealth. After every crash, investors split into two camps, the fearful and the strategic. Fearful investors sell early to lock small profits and bail out at the first sign of trouble. Strategic investors stick to their plan, ride the trend, and exit in stages instead of all at once. One makes relief money, the other makes life-changing money. So what's the framework that smart money actually uses to exit positions? First, know your time horizon. Are you a short-term trader, medium-term investor, or long-term holder? You can't use one exit strategy for all. Instead, sell in parts. Take 25% off at your first target, another 25% higher, then hold the rest. This removes emotional pressure. Here's the truth. Most wealth comes from just a few big winners. Cut losers fast. Let winners run. Professionals track price trends, watch for higher highs, and monitor whether pullbacks hold support.
professionals watch trend, not headlines.
But there are moments when you absolutely must exit or reduce exposure. When the trend breaks, earnings weaken, valuations hit extremes, or retail euphoria takes over, it's time to act. Euphoria is the final warning. Now, let's talk about the biggest mistakes people make when exiting. Selling everything at once, making emotional calls, following social media, trying to nail the exact top, and getting greedy after big gains. You don't need the top. You need consistency. Real wealth, though, comes from thinking long-term. Many millionaires never fully sell their best assets. They rebalance, trim positions, and hold through the noise.
Time is the greatest multiplier.
When markets recover, what do you usually do? Sell fast, hold long, or feel confused? You don't build wealth by selling early. You build wealth by staying disciplined when others panic or chase. We're wrapping up now with some final thoughts and a look at what's coming next. If this video helped clarify your thinking, show your support by hitting like and subscribe. Up next, we'll dive into the perfect post-crash portfolio. This portfolio is built specifically for what to hold during the next bull run. Thanks for watching. I'll see you in the next video. The journey continues from this video straight into the next one, so stay tuned.